Hello there, this is James, and you're watching Tixee Live. In today's program, I want to talk about two central banks and talk about the reaction, how the market has reacted to these two central banks, as well as talk about a little bit about the fallout or the reaction the market is sort of giving us after last night's US interest rate decision. But before I get into that, don't forget, these little programs are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, two central banks I want to talk about this afternoon. One surprised us, or surprised the market in a big way. The other was predictable. Was good old-fashioned predictable, but has since shared something else, which I'll share about with you in a minute. But let's start off with the S&B. The S&B, okay, so S&B announced it has raised interest rates by 0.50 basis points, okay? Now, the reason why this surprised the market is because nobody was expecting this. Nobody was expecting this. Nobody was expecting it at all. So this surprised the market in a big way. And we will have a look at the market reaction in a second. In fact, what this move did, and for those of you who have joined me in other programs, I've mentioned this before, the S&B has a habit of surprising the market. And I remember I was telling the story back in January 2015 when the S&B moved the peg from the Euro Swiss. Anyway, today's announcement means that the Swiss franc has had the biggest daily rise since that day, since the day I've been talking about, since January 2015. So yeah, it was a big mover. So let's have a quick look at it, actually. Let's bring it up on my charts because we can see the market reaction. Here we go. This is the Euro-Swiss franc first. As you can see, before the announcement, okay, this is on an hourly chart. It was trading pretty steady around the 1.3945 level. After that announcement, the euro dropped really dramatically, really caught the market by surprise. And it's currently trading as it stands at the moment at 1.0183. If we have a look at the dollar Swiss, okay, dollar Swiss, same story, okay? Remember, we've had the dollar strength against the Swiss for a little bit, for the last couple of weeks, we've seen a little bit of dollar strength against the Swissy, but after the announcement, again, it was trading around 0.9967. It's currently trading now 0.9740. So again, it came under quite a dramatic pressure there. If we have a quick look at the British pound, Swiss franc as well. Okay. Again, yeah, there was a key level I was keeping an eye on for the British pound Swiss franc, which was around 1.200034. That is since is gone, and it's now really skyrocketed. Really came under a huge amount of pressure on the back of that S&B announcement. And yeah, like I say, but however, it's been boosted a little bit, and I'll talk about it, by the next central bank I'm going to talk about. So currently he's trading around 1.921. Okay, so the next central bank I would like to have a little conversation on is, of course, the Bank of England. And the Bank of England was predictable compared to the S&B, sorry, yeah. They announced they would raise rates at by 0.25 basic points. There was a little bit of rumor. I mean, this is what was expected. There were some rumors building up to it, however, that they might be a bit more aggressive and follow the Fed's lead and follow the S&B's lead and raise by 50 basic points, but they didn't. They were predictable. They did exactly what everybody expected, and they they raised interest rates by 0.25 basic points. So as it stands now, you have the US at 1.75%, CAD at 1.50, Aussie at 0.85%, Euro still at 0, UK 1.25% interest rate, Swiss still at negative 25%, 0.25%, and the Bank of Japan, which we'll talk a little bit about in a bit, negative 0.10%. Now, the initial reaction with the sterling when the market announced the interest rate decision was a little bit of disappointment, But then they managed to, the market managed to then digest a little bit the Bank of England minutes, which came out at the same time. And it sort of turns out that, remember on my watch along, I talked about the 9 MPC members. Okay, and I listed the potential names who were hawkish and those who were dovish. 3 Bank of England policymakers, or 3 MPC members, Haskell, Mann, and Saunders, did vote for a 50 basic point rate hike. So that gave the market, and we'll look at the sterling in a minute, that gave the market a hint of potential more aggressive hikes in the future. And bear in mind, don't forget, the interest rate at 1.25% is the highest level the UK has had its interest rate in 13 years. Okay, 13 years. So now the thing with those 3 members voting for 50 basic points, okay, there's only 3 of them out of the 9, so 6 voted for 25, 3 voted for 50. But in fact, there was 3 of them. Okay, that means maybe more members would join them on the 50. But the market is now sort of betting that the Bank of England by the end of the year will raise interest rates to around about 3%. 3%. Okay. Now, there are 4 policy meetings left. 4 policy meetings left. That means, okay, for the Bank of England to get to 3% and only raise it by 25 basic points, 4 won't be enough. They actually need 7 meetings to raise it to 3% if they would do 25 basic point. So the fact that we only got 4 policy meetings left has given the cable or the sterling traders the idea that we will see more aggressive interest rate hikes done by the Bank of England. So let's have a quick look. At it. Sterling, how it's reacted. Okay, so let's start off with the cable. All right. Initially, this is on an hourly chart. Okay, this is what happened. It was trading around these two levels, and we've been watching for a while: 1.2197 and 1.20034. Okay. Initially, when the announcement came out, like I say, the sterling came under pressure under the US by the cable. The cable came under pressure, so the British pound came under pressure from the dollar. But then, as like I say, again, the market sometimes does instant reaction. Sometimes it takes a while for the market to digest what is being said and what is happening. Okay, so obviously then when the policy minutes came out, the market had to really think about it. And obviously it then gained strength and tested that key area of interest. I'll be looking at 1.2197, is now currently trading at 122.47, okay, against the dollar. Now, that's not just because the Bank of England, that's because something else has happened as well, which I'll talk about in a moment. But yes, now it's currently 122. It's above the 50 and the 100-day moving average. RSI, this is on an hourly, is under 70. If we look at it 4-hour chart, okay, and it's still way under 70, and it's still under both the 50, the 100, and the 200-day moving average. So yes, so there's a little bit, but there's another reason for that, which I'll explain to you in a minute. If we look at the euro against the sterling as well, okay, similar pattern. Euro is under pressure by the sterling. It's currently trading under both the 100, 200, and the 50, and it clearly shows signs there is not RSI is not showing us that it's currently oversold at the moment. It's still above the 30. I would be really interested in this level here because I can see that has acted as a minor resistance a while back ago. And obviously sometimes what happens when resistance are broken, they then become support. So I'd be keeping an eye on 0.85146 as a potential area of interest. If we look against the guppy as well, guppy's a similar story, which is the British pound, Japanese yen. Yes, initial sterling weakness, but because of that Bank of England, because the markets now digest what the Bank of England has said, and those three members voted for 50 basic points, there is a little bit of buying action for the sterling. There's something else. I want to look at the euro again at the moment, because what has happened, and euro did drop under 1.0, was under 1.04 against the US dollar at one point today, and we'll have a look at it, and I'll tell you the reason why that's reverted. But one thing that the SNB has done, the Swiss National Bank, their action has reminds that euro traders of ECB's lack of action. So we have had to see the euro, and we saw the euro still under pressure against the Swiss franc. Euro still under pressure against the sterling as well. So again, that's the euro traders against that. Euro yens is the same as well. So there's euro weakness. The only pair at the moment, which, and this is because the markets remind you that the ECB, they did an emergency meeting yesterday and we're still none the wiser. So there is that. But there is something else which has just come out. It came out about just over half an hour ago. And that was US initial claims. Okay. Remember, this is where this is a report which shows the number of individuals in the United States who are actually applying for unemployment benefit for the first time. Expectation was the number to coming at 215,000 first time claims. However, it came out at 229,000, which is higher. So remember, the Fed is being boosted over the last couple of meetings and last statements by the pretty strong labor market that they have. However, if there's signs that the labor market starts to decline, then we could see those claims by the Fed that the US economy can handle interest rate hikes not be validated at all. So let's have a quick look at the euro dollar. So like I say, it's the one currency pair, the euro pairing at the moment, which has got a bit of a boost, not gigantic, but a bit of a boost on that initial claims. It was currently trading, like I say, just above the 1.03790 level, with the market remembering that the ECB's lack of action. But since the initial claims, it's managed to move higher, and it's currently trading just around about 1.04486. So yeah, the initial claims just sort of gave euro against the dollar a bit of a boost there. I would be certainly watching where it is now, because it's around about the 100-day moving average. So let me show. Sorry, I showed you my chart then. I forgot to bring it up. I was too busy looking at it. Yeah, so there we go. So yeah, I'm keeping an eye on where it is at the moment, because it's touching that 100-day moving average. That might be interesting. Yeah. So anyway, moving on. Now, obviously, the markets in general, we see they're a little bit negative now. They got a bit of a boost yesterday from the Fed, from Jay Powell's comments that he was confident, like we discussed this morning. Those kind of you to join me this morning would have seen it. Jerome Powell did say he was confident that the US economy could handle interest rate hikes. But since then, that's sort of like tapered off a little bit, and the market in general is a little bit more risk-off appetite. If we have a quick look at the S&P, we can see where that is. 1 second, where we go. As you can see, yeah, it's still in slightly negative territory again. We're still trading at 3,708 points, where we have obviously the Dow Jones again as well, 3,119 points. The FTSE currently slightly under pressure as well. What is under pressure? Currently trading at 7,072 points. So you can see the market is beginning to start thinking about this again. which is obviously the R word again, which is the dreaded fear of recession. Remember, like I've said, inflation is high, increasing interest rates when we have signs of economic slowdown. There is fears the economy just simply cannot handle it, and we will slip into potential recession. So that's coming up and it's rearing its head again at the moment. Right, the only other big thing coming up now, okay, of course, is the Bank of Japan. We've had the S&B today, we've had the Bank of England, we've had the Fed this week. Now is the time of, the rising sun, the country of the rising sun. It's down to the BOJ. Now, obviously, we've had a fair bit of dollar yen weakness against the dollar. It's currently trading at 132 now, under that level, which was 130. It was trading at 134 with talks of potentially going to 134, so 135. At the moment, it's lost a bit of momentum because there has been a little bit of interaction from some Bank of Japan members highlighting that, yes, they are a bit nervous about yen's weakness. So tomorrow is their interest rate decision. Remember, it's a minus 0.10%. No action is expected from them. They expect to keep it, but then again, we expected that from the S&B, didn't we? So, who knows? So no action is supposed to happen from them. But the press conference will be interesting to see. I think they might do some little bit of forward guidance in the press conference to say things. So the press conference would definitely be of interest to see what they say in relation to that. So watch that. Anyway, as the markets currently stand, FTSE is currently negative 2.63%. DAX is currently negative 2.69%. Eurostoxx 50 currently trading negative 2.64%. So in general, yes, like I said, the markets are a teeny bit, well, not teeny, but are a bit more fearful today of the Fed and of certain things. And again, like I say, that dreaded R word coming up again. That dreaded R word. Okay, don't forget, you can always ask me questions while I'm live on air. This is what I'm here for. So give it a try. Don't be shy. I see there is no questions currently at the moment, but not a problem. Don't forget, I'll be back online again tomorrow at 8 a.m. UTC to cover the morning session. We'll talk a little bit about how the markets reacted to the Bank of Japan and if they've reacted at all, and if the press conference is giving us any information. Then, of course, again, I'm back on again tomorrow at 1 p.m. UTC, where I'll do a bit of a recap of the European session, look at potential what could happen in the US session. And like I say, it's Friday. Every Friday, I do a recap of the trading week and what a trading week we have had. Anyway, remember, if you're watching me on Facebook and you like this, give us a follow. If you're watching me on YouTube and you've enjoyed it and found it useful, by all means, subscribe. Hit the little notification button. If you like this little program and you found it useful and interesting, give me one of those. It'd be quite nice to know you've liked it. But anyway, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.